Okay, so this is going to be a review of the NASDAQ 100 intraday trades that I took. I took 4 positions, 2 of them were wins, 2 of them were losses. They were all counter trend to the macro perspective, but the trades were there on the intraday and justified, so now I'm going to explain what exactly I did. All right, so to ground us, remembering from the outlook, I said that this is just full on bullish right now. We're in a bullish trend. Everything is bullish. So the ideal thing, if we're trading or looking for swing moves, is to prioritize looking for pro trend trades. But at the time, we are in all-time high environment. So what I did was, in order to capture some trades, because I just intuitively had a feeling that there were opportunities on the intraday today. So I went down to the intraday time frames, but based everything instead of from the daily off of the 4-hour structure. So that's still based on the macro structure because I bend the macro structure into 2 time frames. Really, it's the daily and the 4-hour, but usually it's the daily is the dominant. So if we're saying macro structure, there's the dominant one, which would be the daily, and then the recessive, which would be the 4-hour, if you wanted to, play with that nomenclature, whatever. So anyway, I went down to the 4-hour today, and this is exactly what I saw. So starting from this low, this is our last anchor. This is our last structural point from the bullish trend continuation. This is what took out the last all-time high, and then we've just been full-on parabolic. Then we gapped up, and then we created not necessarily a new significant low, but we generated a low right here, right? So we have that low right there. And so after that was generated, I then saw the price action to where we ran this high, we generated a high, a pullback, and then we ran the high again. So this action right here of generating low, high, pullback, and then running that high triggered to me that there was some sort of price action on the intraday or on the micro perspective that was in play. Why do I say that? Once again, we have low, high, pullback. This is all in the same candle, this wiki candle right here, this black candle that I have highlighted. And then we ran that high. And not only did we run that high, we have to be aware of the action that occurred at this high. It wasn't a break of structure. It was a liquidity draw. And so I saw that liquidity draw. And after that, I went down to the 1-hour time frame to see what the price action was doing per se. All right. And so once I saw that, I said, oh, okay, yeah, that definitely is a liquidity draw. I see we, ran the high, and then ultimately there's a low right here on the 1-hour time frame. We're purely right now looking at the microstructure. We're not looking at the macro. This is still internal of this leg existing from that low up to that high. All right. So once we generated that, well, I'm sorry, let me restart that. Not that low and that high. What we did was this is the pullback, this was the high, and then we broke it. Okay? So this right here is that low. Okay? This is the high, this was the pullback, then we pulled back yet again and ran the high, right? So this ran that and that ran this, and so that generated this internal low right there. And so once we generated that internal low, I saw the liquidity draw and then immediate uninterrupted price action to take out that low. So that to me triggered, hey, there's opportunity here, because immediately after we took this low here, we had pure consolidation. And that to me was like, I want to see what happens inside of this consolidation because there could be opportunity here. All right. And so after that occurred, that's when I started navigating through the time frames to see, hey, what's mitigated, what's unmitigated, which way is the structure looking to break based off of the action here that occurred. I mean, obviously we have a liquidity draw. I should be prioritizing looking for a liquidity draw and then a drop lower. I should be prioritizing bearish plays. And so what ended up happening was I scrolled down to 30-minute, 20-minute, 15-minute time frame, looking all inside of this consolidation, and immediately what stood out to me was this price gap from this open of this candle or the close of this candle to the open of this candle, and I see we mitigated 50%. So automatically I was like, oh, okay, this is mitigated, and we're failing to push higher. And now we're inside a consolidation range. It's getting tighter and tighter and tighter. We're generating, internal lows inside of this consolidation. And what stood out to me next was the fact that we mitigated this low right there. We not only mitigated that low, but it was a part of an action where we had some sort of mitigation here, where we had a liquidity draw. Get rid of this for you guys. We had a liquidity draw right there. And so that right there showed me, there's opportunity there. And so my first position was actually based off of the 15-minute time frame, and I entered on 50% of this price gap here. And so every time I set up my trades, if I'm entering off a price gap, 50% or 100% is the entry, and then my stop loss is always at the top of the body of the initial candle generating that price gap. And so that was the setup there for this trade. And then my initial target was this low here, which is the low of the move. All right. And so that ended up failing. And I didn't know why until, I scrolled down more time frames, and immediately it became abundantly clear. I was just early and I entered at the wrong area. One, I was early. Two, I could have used a more conservative stop and had the position, but I like the way I do things, so I'm gonna stick with it. So I took that L, took it on the chin, and we're keeping rolling, right? All right, so now what ended up happening was more resolution revealed that, hey, that 15-minute price gap, yes, it was valid. I should have had a more conservative stop, meaning I should have had my stop loss here, but based off of my stop loss rules, that invalidated the 15-minute price gap for me, but that revealed this green candle. This green candle is picture perfect sponsored candle. I talk about it all the time. If you're into RCV, you've learned about it. This is what I like to see when I look for sponsored candle plays. They are so powerful. Now, why is this? It fits all of the criteria for a sponsored candle. The first thing, it executes an action. It mitigates previous liquidity, or it mitigates, previous sponsored candle or price gap. Check. It did that. It mitigated this previous liquidity, this little high right here, this internal high. It mitigated that high. Number two, the candle is engulfed, right? It's engulfed by this black candle immediately after mitigation. Number three, we have uninterrupted price action to take out a previous structural point or liquidity point. Here, in this case, it's microstructural, which is this microstructure, I guess, liquidity point here, or structural point, whatever you want to call it, there. And then four, the body to wick ratio favors the body. This was picture perfect. And so I didn't give up on the trade because I was like, I'm pretty sure that this price is going to, drop, but why was I missing? I'm like, I don't see any other opportunities. Nothing else is unmitigated, up here that I see that would be justified to look for entries higher. So, I remembered that I marked out that mitigation of the wick there. So I was like, let me scroll down a couple more time frames. And immediately on the next time frame, I saw this. I was like, oh, that's why there's a sponsored candle there. That's why I lost the trade. And so what I ended up doing, I took my second position based off of 50%. This was a market execution trade. And so every time that sets up, right, I set my stop loss, my entry. My stop loss was here at the high of the candle. And then I had this exact same target, which was this low. Okay. And that was trade number two. So overall, one of two, one very small loss, one very large profit. Okay. And I took out that low intraday, remembering that this is counter trend. So remembering my rules, right? If it's counter trend, I take the immediate structural point or liquidity point, micro or macro structural point or liquidity point as a target. Why is this? Because this is counter trend. And so even to protect not only my capital and protect my positions, this really saves me from, doing anything stupid, which I'll talk about on the fourth position. All right, so that was my second position. I took profit here, and not only was that good because now I have more capital after taking profit here, I now have more capital deploy on any additional positions. All right, so that was my second position, was that 10-minute sponsor candle. If you have any questions, please ask, and I'll happily, go over what I need to. All right, so that was the second position. But now, based off of the momentum of this drop here off the sponsor candle, this was such a powerful sponsor candle, I saw this as another opportunity to get in on another trade. And so what I did was I now scrolled back out. So I'll get rid of all this. Okay. This low right here is still intact. So what I ended up doing was I scrolled back out to about the 1 hour time frame. And at the time, once we took that low on the 1 hour time frame, what I ended up seeing was price dropping significantly and then running this low here. And once we ran that low, I saw, oh, there's a price gap here. And based on the momentum, if this is looking like it's going to drop lower, I saw the price gap mitigate. I caught the mitigation here, the action of mitigation right here at 50% of this price gap on the 1 hour time frame. And then that's when I said, okay, well, I'm not going to enter at the 1 hour. That's too large of a stop loss for me to take an entry on. My stop loss would be here. And to show you why, I was like, this would really be like 50% here. Then my stop loss would be like almost, yeah, that's a lot. That's a lot of pips. That's like 814 pips. That's nada. All right, so that would have looked like that. And then the target would have been the 4 hour low here. And that's only like a 2-to-1. So I was like, yeah, I'm not going to do that. I want to be a little bit more precise with my entries. So immediately after mitigation of that 1 hour candle, I went down to the 5-minute time frame to assess the micro price action around after the mitigation of the 1 hour price gap. So this 50% here represents the 1 hour price gap 50%, and that's what got mitigated there. You can see the wick. All right, and so immediately after, this area right here is what I assessed. So on the 5-minute, there wasn't too much, going on. It's way too wicky. I need more resolution. 3-minute, all right, we were getting a little bit clearer. 2-minute, I mean, it's a little good, but really what shined was the 1-minute time frame. And so all this, you're seeing the price action that you saw right here. This is not what I saw. What I saw at the time developing was this right here. All right, so this is what I saw. And so immediately once mitigation occurred at the 1 hour price gap, my mind shifted to say, hey, okay, if this sell is going to continue, I need to get justification and confluence on the micro structure transitioning to bearish price action. Because in order for us to mitigate this 1 hour price gap, we had to have bullish price action pushing us up. So if I'm looking for sells and we're looking at a price gap for a bearish play, I need to see the micro structure here shift into the bearish sense. All right. And so I saw this on the 1 minute and I was like, yeah, there's nothing here to take yet. But what I did see was the fact that we had now a high, a low that was generated. Why? One, we have, this high here. Then we have this low here generated. We took out whatever there was here. That's cool and all, but there is no entry opportunity. And so what ended up happening, okay, the next few candles, that generated a new low. And once we broke this low, that initial low, that shifted structure for me enough to see, hey, there's an opportunity there. Because now we have a high, we have high, low, and not only do we have high, low, but we have inefficient pricing here that was generated. And that's a price gap on the 1 minute time frame. So that was my second position based off of the 1 hour price gap mitigation. My stop loss was right here at the high of the candle. All right. And then, like I said before, my target was this low here, which was that 4-hour low. All right. So that was my target. And ultimately, we ended up getting tapped in. And then price did, what it did. Do what you got to do. So on and so forth. Weather the storm. Watching price do what it wanted to do. And then ultimately, I'm just going to go ahead and, stop this. Ultimately, we ended up running the low, right? It took a little bit longer than expected, but we ran the low all the way over here, okay? And that was the second trade. So we took one loss, two really good wins, and then just a boneheaded loss, right? So remembering that I said everything here is counter trend that I'm looking at right now. Everything is counter trend to the macro perspective. So the boneheaded mistake that I made, if we scroll back out to the 4-hour time frame, was thinking that this was going to continue lower just based off of, two small wins. All right. So we took out this 4-hour low, but remember I said this isn't a significant, structural point. This is just, a low. It's just a low, right? There's no real rhyme or reason why this should have any significance other than being liquidity. So yes, this is a liquidity point, but it's not really, structural in nature as far as, hey, we mitigated this and now if we break this, we're dying. No, that's not how it works. And so what I ended up seeing was, this is what I saw. I'll show you. Went down to the 15-minute time frame and I saw, oh, hey, we ran, this low here. Oh, great. That's uninterrupted price action. This is what I'm seeing right now. If you're seeing where my cursor is, I didn't see that at the time. But I saw that as uninterrupted price action. It's like, oh, shoot, there's another opportunity here. So got happy, set up the trade, 50%, gave a very nice reaction, and then ultimately took out my stop. All right, 50%. This was the trade. And now, where was I going to target? Right? The low had already been taken. So, where would my target be? Would it be here? Or would it be there? So already you can see where this trade was already breaking down just from the framework. But ultimately, I ended up taking the trade. And I ended up taking the loss. And immediately I was like, oh, I probably shouldn't have taken that, because once I, reanalyzed, I saw, oh, one, we had interrupted price action here. So if I was going to take anything, it should have been off of this. Two, if I scroll back out to the 4-hour time frame, what do we see in this area? If you called out, this price gap here, that's pro trend, you'd be very correct. That is what price came to mitigate. That is what it's having a monstrous reaction from. That, if you were waiting all day for a pro trend move, that's the move you want. That's the move you wanted. All right. And so after that 4-hour mitigation, scrolling down to the 15-minute just to show you the opportunity that was there afterwards. And you can see how I was on the wrong side of this. Immediately on the exact same side, there was a price gap there. This was the valid price gap. And notice how price mitigated. Get rid of this. Get rid of that. Get rid of this. 50% perfectly. And a very, very nice move, justifying that this is going to continue pro trend price action, looking for that high, but ultimately still looking for continuation of trend up to the all-time high. Okay. So all of those trades, all in all, took 2 wins, 2 losses. Profited on the day, which is really good, but took one boneheaded mistake, one loss. I was just too early. So, logging that as data or whatever. And yeah, looking for more opportunities to enter on trades tomorrow and moving into the next week. The price action in Q4 is absolutely beautiful right now. There's tons of opportunity on all the pairs. Yeah, go crazy. If you have any questions, reach out. willing to answer to the best of my ability. Peace.